Okay, folks, let me share with you how I am able to create some income online. And what I do is, if you're able to do this and you have a pension, you have a retirement account, you have real estate. What I do here is with uh, your, um, if you had some savings or, um, some risk money that you're willing to put into the market. um, I'll tell you what I do. Um, I have uh, I have my real estate investment trusts. I have my closed-end funds that produce monthly or quarterly income, and I am reinvesting that into more shares. So that is compounding monthly. And I have a few option trades that I do, um, and they're in very popular names and with stocks that I would like to own. And um, I'm not giving any recommendations on stocks or anything like that. But what you can do is, if you wanted to buy stock, instead of buying stock outright, you would uh, get into a contract uh, and say you want to purchase shares for less than it's trading today. And you would go out a period of time, and you would sell what's called a put option. And if you were to you get into a contract, and if the price were to come to the price at which you agreed to pay, you would be assigned the stock, and you would have 100 shares, because every put option is based on 100 shares. So you'd have 100 shares of that stock, and it would be at a lower price than you would have purchased the stock anyway. So you're still getting a pretty good deal. But what I do, I don't buy stock. I sell puts, and I roll them whenever I get to about, say, approximately 50% of the value of that sale of the put. So let me just go over what I'm doing here, and I'll use Apple. I have Apple in my, and everybody knows Apple. So here Apple is trading at $136.17. Okay, and today's the 8th of February, 2021. Now I sold here a put option at $105. So I'm saying I am willing to purchase 100 shares of stock at $105, because I don't want to pay $136. Now I'm already in this trade, and I've been in this trade since the 22nd of January, so at least a couple of weeks. And I sold it for $425. And the current, if I wanted to close it, it would be for $3.80 and a profit of 45 bucks. But I will wait until this line here, this purplish line, rises above to at least half of this $425, which is expiring in September. Okay, this option is good till September. Now, why do I go out so far? Well, I go out far enough because I want to um, give myself more time and more space from the price of the shares. So if you if you get to trade options, you'll know that if stocks are volatile, you can trade way down here, and you can still collect a decent premium. But for myself, I try to avoid those risky names, and just for the most part, I do take risks. But for the most part, I do try to trade these stocks that I would love to own, and that's the only reason why anybody should trade like this. Okay, um, so volatility and time, they're both correlated. So if you get a big spike in volatility, like the market's tanking, well, yeah, I could trade this 105 put option instead of September. I might be trading, you know, um, June, and still be able to collect the same amount of premium. Um, but as it was on this particular date, whatever the volatility was, whatever the price was. Now I keep rolling these, and I've been doing that uh, for a while now. So I just kind of roll the put to the next month, or the next available option cycle. So um, now, if I ever was to be assigned the shares, say the stock price tanked and it was below $105. Okay, well, I'm saying I want to buy that stock at $105, and it'd be 100 shares, because every option, it says -1. Every option is 100 shares. So my cost basis would not be $105 because I collected $425. It would be down here. It would be down here at $100.75. So that's how you can get shares at a discount. Or, I mean, people do trade them in different ways. They want to get close to the money, like they'll go to, like, say March, it's 39 days out, and say you wanted to trade, you really wanted to buy shares in Apple. Well, instead of buying the shares at $135.88, you could sell this March 19 put for $135 and collect, say, $520. This is the bid ask, so you get like in between 515 and 520, and so you collect like $520 per option. And I only would recommend selling one option per stock that you want to purchase, because you can get into trouble if you're trading bigger than that. And try to be as diverse as you can with your stock selection. But yeah, so you could just sell that and collect the $500, 515 bucks, and your cost basis would then be a little bit less than 130 bucks, and so you get a slight discount. But that's not what I'm doing. Um, so this is how I trade. Um, this is what I consider a safer way to trade, and this might not be right for you, but it's right for me. Um, so here I'll go down some of these stocks that I have. like with American Airlines, it's AAL. This is a low price stock, and as you can see, this line here is starting to move higher. Okay, I'm at 107 bucks open profit on these. In this case, I sold two puts. I sold a $14 put and a $15 put for the month of June, and I'm kind of bullish on airlines at this point because you know, the economy might be opening up. Who knows? It should. It should have been open a long time ago, but anyway, that's besides the point. But we're just here to make money. So what I would do is I wait until you see how that where it says in this little box here, as I put the cursor over the price, this purple line says $108, and then that blue line dated 6/19/21 says $401. So if I held this all the way till June 19, I would collect the full $401. But what I do is I usually close it when it gets to about half, like I said. So it'll get to about $200, and I'll be closing these trades, and I will move this June up to either July or August or September if I decide to stay in the trade, and I may or may not. So, but this has been a good stock for since the crash of last year. It's been a good stock to hold for this type of trade. So that's that one, and you saw Apple is doing pretty good. I got Airbnb, which this is a stock that I am very bullish on. So this trade, okay, right now, as you can see, it's up $204. It's almost halfway, and I will be looking to roll this. So what I'll do is I'll take this. See, I sold this put here at $125. So I'm saying I'm going to buy 100 shares at $125. So, but I never actually buy stock. I just roll, and it's good if you're bullish on the market and you're bullish on the stock, and you really want to buy the stock. That's what uh, the strategy is for. It's put selling, and so I sold that April 125 put for $442. I would roll it. I already have a trade set here that I will apply, and if I roll to like May, and even if I decide whether or not I want to keep the same, this is called the strike price, this here, okay, that 125. I'm saying I'm going to buy the stock at $125. That's a strike price, and I'm saying, okay, I can roll this from April. I can buy back this put option and go with another trade to the May, which would be the next month, $125 put, and I would collect $274. So, but I'm not quite ready to do that. Um, so, but that's what I do, and I just go down I just closed out this one. This was a good trade. If you like ARK funds, they're fantastic. And but I was just looking to, in this case, I closed it out today. What did I do? I closed this trade out today, but it's been a good trade for me. Let's see, ARKG. So I made some money, 840 bucks. Uh, it reached past that limit, and and I just said, let me just buy that put option back to close that contract. So I already made the money with it, and I was actually looking to buy the shares at 90 bucks, and this thing just keeps going higher. Um, so I'll wait for it to pull back before I actually buy shares, but I never want to pay full price. So that's an example of one that could get away from you. If you really want to buy the shares, you should buy the shares, on there's nothing wrong with buying shares, but I'm just doing it. This is as a monthly income. So, I'll continue down here. Boeing is awesome. I love this company. So, okay, so this is 300 bucks. I'm up 300 bucks in this trade. Okay. Um, so I can roll this to um, the next option. This next option is like June. No, because I'll only collect 44 cents, $44 rather. It's expressed as cents, but it's um, okay. So I'll go to August, and I could buy back this 150 put, which I sold for 555. Okay, so I could even come down a little bit. I can adjust the strike price down from 150 to 145 and collect $256. Okay, so that's probably going to be on my. I will probably do that later today, but let me just work through this so I can share what I'm doing. And this is Berkshire Hathaway's. Again, I sold this June 18. That's the date it expires. $195 put for 392 bucks. And here we are at $236 a share. So when you do the math, you go 236 to, I'm saying I'm going to buy it at 195. So that's about 15% drop, right? So let's say it would be, yeah, like 15, 17% drop. So um, I got 158 bucks out of the $392. So still I'm going to let this decay. This here is that decay value. It's called theta. You don't have to, well, you don't really have to be concerned with it, but it's $2.91 a day. In theta decay, that's all things equal. That's the price not moving. That's just the decay of the option. Um, so, okay, Berkshire. Then I got Caterpillar, which is up. Um, it's up 80 bucks, but I'm looking to get 283 bucks. Uh, I sold the May 150, so it's down here. And here we are trading at $195, 196 bucks. And, I'll just sit on that and just let it decay daily. Carnival Cruise, this is looks a little bit different for what I'm doing, but you get the idea. I'm selling puts. Okay, I don't want to confuse you, but this is stock that I want to purchase. But every day, this purple line is moving higher and higher and higher. Depending on what the price is doing, it will meet this line up here at the expiration, which is in July here. But I'm looking just to make, you know, a little bit of money. Not all of this, 2 grand or whatever it is at expiration. I'm looking to make maybe half, or less. It depends. In this case, I do have two calls that I sold, which you don't have to be concerned of. But that's what this drop is in this structure right here. So, but continuing on, um, CRISPR. Now, in this case, this is a great stock. I love this company and what they do. I am down $216 in this stock, but you know what? I'm gonna hold this no matter what. This is the price chart on it. Um, they um, this is I sold this $95 put, and here we are at $169, so I'm not too concerned about it. What I could do is I could say, okay, let me buy back this and close it out and take my loss. But I'm not going to do that because I'm still bullish on it, and I would like to own it at $95. So what I could do is buy back that 95, and I could go out to January of 22 and roll this all the way down to $75 and still collect $270. So, but I'm not ready to do that. So I'll just hold that. Everything else is working out pretty good. This is Deere, John Deere. You can see I'm still slowly making my way up. I collected $615 on this, and that's on January 20th. So that's still good time. And this is out till September, by the way. So I trade way out in time because I like safety. And this is Dollar General. This has been a struggle too, but it looks like it's starting to turn around. If you look at the chart, um, I think, it could potentially start to recover. It looks like it is, so I'll just hold it. And but I am down in this. I'm down 123 bucks, and but anyway, that's okay. And then I got a bunch of these closed-end funds and real estate investment trusts, and um, here's FedEx. FedEx here is doing pretty good. It's been tough though, up until very recently. So it's recovering, and I'm looking to roll this as soon as this profit target hits half of that 309 that you see in that box there over here. So yeah, I'll go on to what else do I got here? Iron Mountain. Iron Mountain, this one. This is I sold this $35 put. But I am down in it, but that's okay. I don't mind. It's such a low price stock. I'll take it at 35 bucks, and but I am down in this particular trade. And Johnson and Johnson, of course, is going to be in my portfolio forever probably, and that's doing pretty good. I sold a 140 June put right here, and here we are at 164, and I sold this on the 19th of January. So I'm holding that. And JP Morgan, of course, that's in the forever portfolio. That's that's getting there. It's almost halfway. And I say halfway, but you could, I mean, sometimes I hold it for a little bit beyond that, or sometimes I just, take maybe, 35% of the max profit, and I say, see you later. If my opinion on the stock changes. Marriott, of course, is a great company. This is doing pretty well. Done very well with that. Um, let's see, Altria. This looks a little bit different because I'm trading two separate months. Um, I have a call spread here. You don't have to really be concerned about calls. I'm just trying to show you how I'm selling put options on stock that I want to own. But here I sold a $45 put option in September. All these trades I roll every month, so sometimes they show profit on a particular trade, but sometimes um, you know they may or may not be profitable at this particular time. So Microsoft, okay, that's $228 profit. Um, Here we are at 241 bucks, and I sold a 180 put on it expiring in June, and we're halfway there. So this is going to be a trade I'm looking to roll, and I'm looking to roll it up because look, I traded this on the 19th of January. Let me just see where that was. 19th of January. Um, 19th of January. Where I am right here. Okay, so this stock has moved a lot higher. So say I traded this at 215, and here we are at 241. So that's a $25 move, right? And so I'm gonna increase the price at which I would pay. So this is a 180 put, so I'm gonna say let me bring it up 10 bucks to 190 bucks and move the month out to September, and I can collect $369. And so that's what I do. I just keep rolling, rolling, rolling. And what else do I get? Northrop Grumman. Um, this one, um, I don't know. It's been tough for the stock, but I think it maybe I think it bottomed. I think it bottomed, and I think it bottomed right here. So I don't. It's hard to know which way a stock is going to go, but definitely more bullish on it right now because I was just looking to just take 50% of this and just close it out. Take half of this $382 here and close it out and say goodbye, and move on to something else. Omega Health, um, well, we're doing pretty good here with this one, but this has been a project, this stock. I've been kind of rolling this one and somehow managed to be profitable in it. But and Tesla, of course, this is a credit spread because you don't want to just sell naked puts on a stock like Tesla when it's trading at $865 a share. What you can do is you can create a spread. So here I sold a July 355 put, and I bought a 350 put, and the difference here is $5, and I collected, say, I did it 3 times, so it was $102 times 3, so I collected that 306, and it's expiring in July, and I'm actually trying to close this out. Um, today, but I'm not sure if I'll be out. It's been tough to trade. I mean, I'm trading way out of the money, and it might take some time to fill that order. But I'm being kind of stingy with the price too. Um, so I'll be looking to close that. And I get Visa here. Visa's a great company. I might replace it with PayPal, or Square, but this is a great company. Um, So this is working out pretty good. What did I trade that? I trade that on end of December, and here we are in February. So it's been kind of rocky here since that time I traded it. So it dropped from 218 to 193. So that definitely moved. But hanging in there. And when this is just a stock I took a shot with because I like hotel stocks. Um, and This here is profitable, um, and I will continue to hold. I just sold this one recently, I think. Yeah, on the 5th of February, I sold this one. Um, but what you're seeing here is stocks that I rolled from a prior month, or from a different time. So I am constantly rolling these and just letting them kind of decay in value. So, and they're all stocks that I would want to own. So, and here is Exxon. I am pretty much bullish on this stock now because of what's going on. I think I think this is going to go higher. So I was struggling with this one for a while too because of the, I've been trading it for a long time and I'm short 3 puts on this one. So I've been working with this one a long time and it's not a high price stock. Um, so I got I sold three $50 puts, and these expire in May. And this is just starting to come back to life. It was just at like $45, if I'm not mistaken. So it, yeah, it was right here, $44. So this thing was down, and now it's coming back to life after the earnings report, and it probably got upgraded. Who knows? But this has been a shit stock for a while. It went from 55 down here, 31. I mean, after this crash here, 60 to 30, you know. But it's coming back. It's coming back. Who knows what they're going to do with the company, but they're talking about merging with Chevron or something like that. Forget what I heard, but anyway, so that's what I do. I think it's important to have REITs, real estate investment trusts, closed-end funds for monthly and quarterly dividends to cover your expenses. Um, and um, these option trades can be a great addition to your portfolio on stocks that you want to own. And you can make pretty good money with these. I mean, in a bullish market, these are bullish trades. You want the market to go up, but the market tends to drift higher, and then crash. And for when it crashes, you got to have hedges on. And I use the S&P 500 to hedge. And um, what you can do is just say on your portfolio, this is a portfolio margin account, so that that's why my margin requirements are very low, because it's a risk-based account. Um, but you can do this in a standard margin account. And what was I going to say? Your hedges, you should be hedging these positions, in case there's a crash. Um, you got to plan on spending a portion of your portfolio on this, and it will be a drag, or um, there are ways to pay for it, just using this SPX um, uh, vehicle. You could just create trades. I cannot really share that because a lot of that is like it's proprietary, and I can't share that with you. But I will say that if you went and just bought put options on the S&P, and you went you did it every quarter of the year, you buy some hedges with SPX. So you'd be buying put options. I've been talking about selling put options, but I'm just going a little bit further ahead and just letting you know you can hedge your portfolio to a certain degree, maybe not 100%, or you can. I mean, there are people that hedge way too much, and in a crash, they make a fortune. Um, you know, but you can hedge it. But I just wanted to share that with you with what I do with for income, and it's a great way to, I think, to supplement your retirement funds. And uh, but I do want to stress this is for risk assets. This is for your risk. You have a pension already. You have an IRA. You have a Social Security. You have real estate somewhere. What I'm sharing today is for risk money that you have. And if you trade the market, um, you know, most day traders are going to lose money. Like if you're trading like E-minis or whatever, you're going to get torched probably. And I think this is a much simpler way to do it on stocks that you want to own, but you don't want to pay full price. And I don't know, it's just an effective strategy, I think. And if you wanted to do trades like I showed with Tesla, like with Tesla, oh, not that one, Tesla, Tesla, you can you could do spread trades like this. It's called a credit spread, and it's a bull put spread is what it's called, and because you're bullish and you're selling a put spread way out of the money on this in this particular case because the option premiums are very high because it's a high price stock and it's all over the place. So you could trade Apple like this. You can create a spread, but your um, your credit is going to be a lot less. Like say if you did like here, I'm short this one here. So if I went in here and I said let me sell a vertical spread and okay, it defaults to 10 contracts to just bring it down to 4. But the point is, if you sell 105 and you buy 102, that's $2.50, which is in option speak, it's $250 per contract. So even if you drop this down to $100 and made it a $5 spread, now you'd have a $500 risk, but you're collecting 86 cents, which is $86. And I mean, you could do that to limit your risk. So if I take off the trade I have on, you would see it would look something like this. Okay, you collect $86 and your max risk, if the shit hit the fan, is $414. So you could still do the same sort of trading, and it just takes longer. And just know that this leg here that you bought, this $100 strike, is gonna decay faster than this one that you're selling because it's closer to the money. Okay, uh, this the $105 is closer to the money. Obviously, this is the price, $136. This one here is going to take longer. This $105 put that you're selling is going to take longer to decay. So anyway, so that's what I do to you know to make some monthly income. I try to live on this money here and let these REITs and closed-end funds compound monthly. And but that's just a strategy for you. And I just thought I'd share it. I'm not a investment advisor. I don't know your situation, and I'm just somebody online. You don't know me. So what I would suggest is try it on paper. You can sign up for an account on Thinkorswim here and do a paper trading account, and you can create these trades and just do them. And when you're comfortable with them, and you've gone through market declines and run-ups in the market, and you've hedged your positions and you feel comfortable, you would then start with one or two or three or four or five and just make sure they're diversified and just try to just remember diversified is when the shit hits the fan everything tanks. So just make sure you have a hedge on. You have to be hedged and and do these in a paper trading account only for a period of time of maybe 6 months, a year, until you're really comfortable doing them. I still trade my paper account, and I've been trading for a long time. But that is what I would suggest you do. Okay. Okay. Sorry, I went a little bit long here, but I just wanted to share that with you. I think that can help a lot of people. Um, even if you're just trying to learn something new, this is very important. Okay. Have a great day. Bye bye.